Hello my friends! As many of you may know, this channel is all about food, fun, and finance. Food feeds your stomach. What's as important to know is that finance feeds your brain, and that knowledge will help put more money into your back pocket. In Ling's last video, she talked about building a dividend portfolio to generate retirement income. Today, she is going to share with you her first month's performance. In addition, she's going to talk about how to utilize covered calls to possibly increase and maximize your monthly return. Please make sure to watch this video in its entirety as she will show you an actual stock she purchases so she can initiate the covered call and her returns at month end. Keep in mind she is not recommending this stock, she is simply showing you what she has actually purchased and sold. Though she touches on what a covered call is, I recommend you do some independent research on at least the basics and its potential risks. If you haven't already done so, please hit the subscribe button, click the bell for notifications, hit the like button, add a comment below. We greatly appreciate it. Let's go!
Just to refresh everyone's memory, in the last episode, I shared with you I'm about to embark on a dividend stock portfolio journey. I project about $150,000 is needed for retirement. A third of that, which is $50,000, will come from this dividend portfolio investment. Ideally, within the next 2 years, I would identify the sound and healthy dividend stock companies to purchase, as well as using the different strategies to grow this portfolio. One thing to keep in mind is the objective of this portfolio is to generate the most cash flow to supplement the retirement income, and therefore we will not be paying too much attention on stock value appreciation. The strategy I'm sharing with you is to sell covered calls. And let's first talk about what covered call is. Assuming I own 300 shares of stock that I purchased at $38 per share. My goal is not to hold on to this stock for the long term, so I'm okay to sell it, if that means additional cash flow can be made. I then place an order to sell the option to any potential buyer the right to purchase these stocks. When I place the order, I get to decide what price I'm willing to let it go, and usually this price is higher than what I purchased for. This is called a strike price. I also get to decide when the last day the buyer is able to purchase from me, and that's called expiration day. There are potentially two outcomes. Let's take a look at them from the seller's perspective. Outcome number one, the stock price went above the strike price. In this scenario, the option buyer likely will want to exercise the option, which means you will need to sell the stocks. You do make money from two ways. Number one, you keep the premium when you sold the cover call. And number two, you made money from selling the stock at a higher price than how much you purchased for. Outcome number two, the stock price stays the same or went below the strike price. In this scenario, it doesn't make sense for the option buyer to proceed with purchasing the stock, and therefore the option will expire worthless. In this scenario, you as a seller are still the winner. Number one, you get to keep the premium when you sold the cover call. Number two, you still have the stock, so you can potentially repeat this process to receive additional premium. On the other side of this transaction, let's think from the buyer's perspective. The buyer is only using a small premium, which is a fraction of the stock price, to have the right for potential purchasing the stock. If the stock price goes up significantly, they just spend a small fraction of the money as deposit to lock into some huge gains. If the stock price goes down, then the only thing they're risking of losing is that fraction of the stock price, which is that premium. That's why covered calls make sense from both seller and the buyer. It just really depends on what your strategy is and what you're trying to accomplish. Lastly, a few terminologies to remember. In covered call transaction, the quantity goes by contract, One contract equates to 100 shares. If you think you may sell covered calls, then when you purchase a stock, you may want to purchase in the 100 share increments. And the transaction description is sell to open. We talked about the strike price, which is a price that you're willing to sell the stock for. And you also have to set an expiration date. The first dividend stock I identified is Main Street Capital. Main Street Capital is a business development company that specializes in providing private equity and debt capital to lower middle market companies. The company was founded on November 1st, 2007. They have about $2.82 billion in market cap. On June 28th, the stock price was $38.80. The expense ratio is a little bit high, around 5.94%. They do pay a monthly dividend, and their dividend amount is 12.5 cents per share per month. They have an expiration date of July 1st, 2022, with a payment date of July 15th. Based on my analysis, Main Street Capital has met all three of my criteria. Number one, dividend growth has gone from 12.5 cents in 2008 to the current amount of 21.5 per share per month. The payout ratio is currently sitting at 51.85%, and it has not cut their dividend since its inception. It doesn't mean that they will not make any changes in the future, but it does have a good track record. The last one, the stock appreciation, is not part of my criteria. However, it's good to know that the stock price has not gone down since 2007, so any appreciation that stock price has generated is just gravy. Let me talk about payout ratio quickly. What this means is Main Street Capital is using 51.85% of their total profit or their total earnings and giving them back to its investors as dividends. This is a very healthy percentage. If you ever see payout ratio greater than 100%, you may want to ask additional questions how the company is able to pay the dividends with more than how much they made in profit. So that's a good metric to keep in mind when you're analyzing which company to buy for dividend stocks. Let me show you where I went to do all my research. Let's go to yahoo.com. And you can see there is a finance tab. Click on finance. I then typed in MAIN, which is Main Street Capital's ticker symbol, in the search box. Now there are some basic statistics about Main Street Capital is displayed on the screen. If you scroll down in the middle of the page, you will see forward dividend and yield, $2.58. That usually is displaying the per share per year dividend amount. Right below that is X date. If you remember, you need to purchase a stock before its X date in order for you to receive dividend payments. If you want to see how the stock price has progressed since its inception, what you can do on the right-hand side where the graph is, select the max, and then you can use your cursor to move around from the beginning of the time to current. And as the cursor moves, it will show you the stock price from 2017 all the way to 2022. As you can see, the stock has suffered some dips during COVID time. However, it has recovered very, very nicely. Next, you can click on historical data and you can select the day range, which I selected from its inception. Next selection or drop down, you can select dividend only and click on apply. This will give you all of the historical data regarding dividend payment from its inception. And that's where I saw a very healthy, steady growth of dividend year over year. Lastly, you can find out the payout ratio in statistics. So click into statistics and scroll down to dividends and splits, and you will find a payout ratio. My Roth IRA is currently with Mirror Edge. I wanted to show you how I place an option order. On the very top, under strategy section, you select calls or puts and you enter the stock symbol MAIN. In the options section, your action is sell to open. This means you're selling a cover call. And quantity, I enter 3, which means 3 contracts equates to 300 shares. Next, you need to select the expiration date for the option. If you remember from earlier, Main Street Capital dividend X date is July 1st, which means if you purchase the stock before July 1st, you will get paid its dividends. So anytime after July 1st, if I sell the stock, I will still get paid its dividends. The next entry is strike price. Strike price is at which price you are willing to sell the stock. Since I purchased the stock at $38.80, I am okay to sell the stock at $40 per share. And lastly, is this a call or put? Call just means you are assuming the price of the stock will go up, and the put is the opposite, the price of the stock will go down. Once you have completed your entry, the option detail will appear in the bottom. And what this is telling you in this example is the bid price is at 50 cents, the asking price is at 60 cents, the last transacted price was at 53 cents. It depends on how the stock is doing on that particular day. I usually would choose a price between the bid and ask and close to the last transacted price. Finally, in the detail section, I usually only use limit order, and for the price, whatever the final option price I have landed on, in this instance, I'll probably choose 55 cents and duration only for that day. And if the transaction does not process, then this order is canceled. I hope this demonstration is helpful for you. Now, different brokerage company may have a different look and feel for this order form. So to summarize, for our purpose, this will always be a call because we're doing a cover call. The action should always be sell to open. The quantity goes by contracts, and each contract equal to 100 shares of the stock. The option price, you look at a bid versus asking. I usually select a price in between these two amounts. And for the order, I usually set a duration for the day. Alright, now it's time to review my very first month performance results. I was looking into Main Street Capital. Based on my research, the X day for the dividend was July 1st, 2022. Which means as long as I purchase the stock before July 1st, I then should get paid out for its dividends. So on June 28th, I purchased 300 shares of the Main Street Capital. The stock price at that time was $38.80 per share, which means my initial capital was $11,640. On the very next day, June 29th, I immediately sold a cover call with a strike price of $40 per share and expiration date of 7/15. The premium for the cover call was 30 cents per share. After the fees, I was able to receive $88.04 immediately on that day when the transaction went through. I'm recording this video on July 16th because I wanted to wait until the dividend payout is complete, as well as I found out what happened to my cover call so that I can report to you my first month result. So here it is. July 15th, the dividend was paid out to my account for $64.50. On July 15th, the stock price closed at $40.97. Because the stock price is above the strike price, that means my covered call option was exercised, and I have to sell my stocks to that potential option buyer. By selling the stock at strike price of $40, my gain after the fees was $359.73. Now let's take a look at the month-end earnings. There were 3 payments that made to the account. The first one was $88.04. That was the selling cover call premium that was paid to the account right on the transaction date, June 29th. And then on July 15th, there was $64.50 for the dividends that's paid out for owning the 300 shares of the Main Street. And finally, by selling the stock, because the cover call option was exercised, the gain from selling the stock was $359.73. In total, the gain was $512.27, which makes a first month return of 4.4%. I'm very happy and excited for this result. From the time I started June 28th until today's date, July 16th, it's a little bit less than a month. With this kind of results, if I'm able to duplicate month over month, the result after a whole year would be phenomenal. I truly hope you find the detail of this video helpful. I will continue to use cover call strategy to continue to help me build this dividend portfolio.
All right. If you want to learn more about covered calls regarding how to select strike price, expiration dates, the pros and cons, please leave a comment below. If you found this video helpful, please subscribe to this channel, hit the like button, and share with anyone who may also benefit from this knowledge. See you all very soon. Bye.